Good morning, good afternoon, good evening, wherever you are in the world. Welcome to the FIDIC COVID-19 Webinar Series. This is the 13th in this series. We're delighted to have you wherever you are in the world. Today, we are looking at the role of the international financial institution, including MDB. Their position in the world is critical. Their contribution to infrastructure development is unquestionable. It will be interesting to see what they've been up to in terms of their activities, the feedback from the ground on projects, and how they see the future as we come out of COVID-19. For those who are new to this program, we've been running it for the last 10 weeks. This is the 13th in the series. We've covered a number of topics in the past, starting off looking at different geographical area where we had close to 800 people that participated. We covered issue about force measure. That was quite interesting. It was an eye-opener where we had close to 1,000 people that participated. We moved on to look at the issue about joint venture, how joint venture has been impacted in this particular program during this COVID-19. We look at the role of the consultancy in the procurement process. We look at insurance and risk. We cover issue about alternative dispute resolution. We also address the issue about digital as more and more people are working in remote. We looked at the role of the employee, health and safety, and the requirement that needs to be addressed. We also talked about the issue about the impact of COVID-19 on the balance sheet. How do you get your business ready to come out of it? We discussed the issue about communication, which is quite critical, and managing crisis. And the last time we looked about kickstarting your business. What do you do as you come out of the business? And it's fair to say so far we've had an incredible number of people supporting this program. Close to 130 countries have participated in the program. We've had close to 7,000 people who are involved over the 11 seminar that we have so far. And in addition, over the YouTube, we have close to 7,500 people observing. Obviously, members and industry believe what we are doing is right, and we thank those people who are involved. Can I pause for a minute and actually say, for those who are impacted by COVID, our sympathy and condolences to those who lost their life and those who are impacted. The reality of it, we are not out of it yet. Different parts of the world are going through different phases, and we need to try and make sure that whatever we do empathize with the government and the people and the city in different parts of the world. Today, we are focusing on the role of international financial institutions. I'm delighted to have 4 eminent MDB supporting us from World Bank, Inter-American Development Bank, EBRD, and also Asian Development Bank. In addition, once again, we are privileged to have our president joining us, Bill Howard, who I'll invite in a minute to join us. But also, we also have Manish from United States joining us. And also we have, Gavin English, a board member of FIDIC. Having finished this particular 5 minutes introduction, we hope to go into the same by giving each speaker 7 to 10 minutes maximum to speak. And we hope to complete that exercise in an hour's time. At that point, we will have an open session for half an hour for question and answer from the floor. And at this point, before wasting too much time, I'm delighted to invite our President William Howard from United States to say a few words. Bill, the floor is yours. Thank you.
Thank you very much, Nelson, and I will be brief. We have a number of highly qualified speakers today, and we want to get to that as soon as we can. The first thing I want to do is thank you, Nelson, and the Secretariat staff for putting these webinars together. Under any circumstances, these would be a challenge and difficult to do. Under the circumstances of working from home and remotely, it's an incredible challenge. And so far, this is the 13th webinar we've had. They've gone very well. I'd also like to thank the speakers today, subject matter experts in the subject today. And they are very, very busy people, and we cannot thank them enough for spending some time with us today on this important subject. And finally, I'd like to thank the participants. As Nelson indicated, we've had a number of people from over 130 countries listening in on these webinars, which is telling us that we're addressing the right subjects, and certainly the interest in this these critical matters is very high. So with that, I thank everyone for participating, and I'm looking forward to this interesting session. And back to you now, Nelson.
Thank you very much, Bill, for that welcoming statement. I'm delighted once again, Bill, that you are able to join us, considering the time is about 6 o'clock in United States right now. And again, you keep on supporting us. Thank you very much for your leadership. I think the subject we intend to cover is quite range. At this point, I'm delighted to invite Gavin English, a board member of FIDIC and managing director of IMC Worldwide, to share his perspective on the subject in terms of the role of the IFI, how he sees the whole issue, and perhaps, share some thoughts with us. Gavin, the floor is yours. Thank you. Gavin, can you unmute?
Sorry, thank you, Nelson, and I hope everybody's safe and well wherever you are around the world. It is difficult for us all. I would like to start with just some more general and perhaps a direction of travel that I think this should go as we move into the recovery phase. But the impact of COVID-19 pandemic first started in Asia, Europe, and North America. It's now spread to all parts of the world, as we know, and we're seeing a rapid acceleration of the disease, in particular in the developing and emerging economies. And it's beyond the profound human cost and loss of life. There are enormous economic and social impacts as well. The most vulnerable people in the most vulnerable countries where the crisis is hitting it's particularly destructive for these, undermining the progress made towards the Sustainable Development Goals. And the many development gains that we've seen over the past half century are at risk of being obliterated, as we know. So the global scale of the crisis presents an unprecedented challenge for the IFIs, who are facing many decisions on how to reprioritize their budgets in order to support partner countries all around the world simultaneously. And the IFIs are responding to this and providing emergency relief. The World Bank, for example, last week announced that their emergency operations to fight COVID-19 have reached over 100 countries worldwide. And the bank has also pledged to make available $160 billion in grants, loans, and equity investments over the following 15-month period to help developing countries respond to COVID-19. And similarly, other IFIs, and you'll hear more about this from the other speakers, are responding in a similar fashion. So the response to COVID-19 has fallen into three phases, which overlap, but have essential differences as well in terms of priorities. So the rescue, recovery, and the transition and growth are the three phases as you see it. And clearly in the short term, the response by the IFIs is to strengthen health systems, to maintain food security, nutrition, and continuity of essential services such as clean water, education. But it will shift, and is shifting, to protecting and creating livelihoods and jobs, building resilience and boosting recovery. And to do this, strong and sustainable investments are going to be needed in physical, human, and natural capital going forward. Going forward, the recovery needs to be green and to be a path to a better economy and also better health and well-being. So the IFI investments in infrastructure should focus on sustainable development and resilient infrastructure. There is an opportunity to ensure we build back better to some extent, ensure and renewable energy schemes are going forward, resilient energy transport, water and sanitation systems are being built, and sustainable cities. The objective should be to accelerate progress towards the Sustainable Development Goals going forward, and resilience should be at the heart of the recovery for developing and emerging economies. Otherwise, we'll be exposing these economies to future shocks and going forward. By helping countries to align their regional goals to the SDGs and engage in the private sector, governments will be able to attract future investments that they need to create a more sustainable economy. Now, considering the long lead time to capital infrastructure projects, which we're all aware of, the IFIs need to support governments now to review the infrastructure pipeline and to prepare a set of shovel-ready programs and secure the financing to implement and scale up these programs. We also need to support developing emerging economies to address some of the corruption, transparency and efficiency issues that we see. And we've got to keep in our minds that a third of funds for public infrastructure are lost worldwide on inefficiency and corruption. So pulling this together, the collaboration between the IFIs will be essential to helping developing countries respond. And this includes tackling the debt burden of developing countries and ensuring that they have access to finance with Marshall Plan going forward. To end, I'd just like to say that there's one lesson COVID-19 has taught us all. It is now it is now interconnected, our lives are. Systematic risks everywhere are at risk to us all, and we are only as strong as the weakest link. In the case of COVID-19, if one country is a pandemic hotspot, we're all at risk of infection, reinfection, and our health depends on the health of others. If we are to look forward to a better future, people elsewhere in developing emerging economies must also too. So with that, Nelson, I'd just like to end there.
Gavin, thank you very much for a very quick helicopter view of your position on the subject. I mean, it's fair to say at this point that the role of the IFI is quite significant, as Gavin mentioned. Not only we're looking at the infrastructure, but we're looking at the health of the people. And it's very important, as we've built a long-time relationship with the IFI, to hear their views as to how they're responding. And I suspect they're probably responding in different measures depending on the time cycle of activity at that point. We are very privileged to have Enzo Laurentiis, who is the Chief Procurement Officer from World Bank, to give us his view. And I think I'm really quite keen to hear Enzo's position, because I do understand that whilst the issue about infrastructure is top of our league, but actually the priority about health and safety and the well-being of people is also equally important. So Enzo, the floor is yours. Thank you very much.
Thank you very much, Nelson, and good morning, good afternoon, good evening, everybody. Pleasure to be participating in this workshop. So we know that the pandemic, the COVID-19 pandemic, it's been an uncharted territory for all of us, for governments, for institutions, and so forth, and has unleashed this massive, not only health crisis, but also economic crisis. And this will have a massive impact with the global economy shrinking, we estimate by $4.2 trillion. So that's going to be massive. And obviously the developing countries are affected even disproportionately because of the weak healthcare systems, and of course the debt problems and other development issues that compound the problem. So we have stepped up in a major way at the bank with a sort of a phased response. So immediately focused on saving lives. This is going to be incredible because in just a little over a week, less than 2 weeks, there were a large number of projects that went to the board. As mentioned by Gavin, 101 countries are being assisted now through new project and restructured projects. 11 more are being prepared, and we continue with that. And of course, this is focused on again, saving lives. So procurement is at the heart of this, not infrastructure, but procurement of medical equipment and supplies. On that, I just wanted to mention that at the World Bank, we also have added an option, which is unprecedented as well, to provide what we call bank facilitated procurement. It means we are actually helping, reaching out to the suppliers and negotiating contract conditions for the borrowers who, in this particular moment, don't have sometimes the capacity to deal with emergency procurement, while still, ensuring due diligence, and the right conditions, and of course, the price benchmarking and so forth. So that's just the very first. But now we are also, scaling up the response to the both helping, protecting the most vulnerable. So there's going to be a really large social protection program to help with that, help households and so forth. And that, of course, then we'll move on, and actually already working on it, preparing to help, to save jobs and businesses. So that's going to be certainly an area of focus. And then, of course, moving on to building a more resilient recovery. So really helping countries to prepare also for the future, because, you know, crises, of course, the last few years have demonstrated tend to happen again and again. So it really, the preparedness is a big part of that. So it's going to be a massive program, first help, and then economic recovery, social protection, and so forth. So I think Kevin already mentioned some numbers. I don't want to repeat them. So 160 billion pledged in grants, financial support over 15-month periods, you know, nearly a third of these projects are actually in fragile and affected and conflict-affected situations. So that means that the challenges are also particularly important there. Just to mention, since my job and many of my colleagues here focus on procurement, that while speed is of essence, but also the importance of focusing on the fiduciary assurance of this project. So in both can be done, can coexist, and we have a number of you know, guidance notes out. We have streamlined documents, and we have a lot of approaches to guide our countries in ensuring that while they do move very fast to procure and to, you know, rebuild, but also they ensure that, you know, the governance and the integrity aspects of this, as well as the value for money, is maintained. Just to mention a couple of things that are more related to procurement, of course, you know, there's been a massive disruption in supply chains. That's one of the things that has been affecting certainly health, because, you know, there's no stock of medicines, long lead times, and so forth, but also everything else, right? So including infrastructure. I mean, not only the supply chains are disrupted, and some of the equipment, for not only for medical, for any area of the economy, you know, have many suppliers all around the world. And think of ventilators, because I focused a lot on that recently, can have 70 different suppliers globally. Imagine what that means to the supply chain. Travel has been disrupted. Cargo space is not available. Sometimes supplies get seized. So it's really going to pose some challenge there. There unprecedented. Of course, the fact that people cannot travel makes it difficult to bid. So, you know, we have supported virtual bid you know, openings, virtual bid sites, and that's a way to deal with that. Submission, of course, of bid themselves by email or by an authorized representative, by a representative in a consular or in another diplomatic mission. So there are many ways to get around this. During the contract itself, you mentioned force majeure. I mean, obviously, this is going to be a lot of different disputes are going to be unleashed by this, because, you know, the critical impact on the ability to deliver force majeure, of course, is triggered. It's in our contract. It's the country is the party to the contract, so we'll have to trigger, but obviously this is a clear case, so we support that. So there's going to be cost increases of all kind and all type of problems. So what do you do in infrastructure in particular? Well, I mean, this is going to be a big challenge, because there was already a massive infrastructure gap, as you know. It was like 15 trillion globally, and governments, when they face a particular fiscal constraint like this, it's going to be massive related to the emergency. Typically don't invest more in infrastructure, right? So that's a big challenge that is going to be on how to ensure that there is still, because the infrastructure agenda does not go away. It still remain critical, and when there are stimulus programs that are implemented, actually reach broadly across the country, you know, to really help deep into the supply chains, not just the massive, the major contractors. So money will have to flow more on the economies. I mean, this is something that is just a reflection. I'm not saying this is necessarily something that we have yet focused a lot on the bank, but clearly that's what the country strategy will have to be. So there are going to be challenges that were already there that become even more critical, and the policymakers will have to face in order to really attract more capital. Clearly, every institutional investor, all the IFIs are a drop in the bucket of this incredible gap. So, you know, it's critical to leverage private sector capital. In order to do that, what is it? It's important to actually tackle problems that we were thinking before. And with you in particular, the colleagues at FIDIC, we talked a lot about, for example, risk allocation, right? I mean, if you want to attract investors, if you want to attract the private sector, we really need to think careful what that means. I will have to think carefully to some of the things that were mentioned by Gavin in terms of what it means to build quality infrastructure. Right? What is a quality infrastructure investment? And that, in addition to all the economic efficiency, the social and environmental sustainability is critical. I think Gavin was alluding to that, as well as the resilience, including, for example, to climate change and other efforts. Of course, good governance. I mean, the integrity, the transparency, the openness of all this, and you know, the really critical aspect of market development, of really working with contractors to develop them, to develop the market. So all those things are things that were already there. Together with the colleagues in the HOP and the ESO procurements, we wrote a paper for the G20 on that, on what the world procurement is for quality infrastructure. But now it's becoming, I think, even more critical, because, you know, if we really want to continue build the infrastructure agenda and attract a private sector capital in this particular moment where the fiscal situation is so constrained, because, you know, there's going to be much less money coming from governments, then it's critical also to ensure that the quality infrastructure attract the best in the market and attract investment and attract, you know, the private sector to contribute into this. Of course, there's another aspect that we discussed before, which is that it's really an opportunity to accelerate the technology aspect of infrastructure. There's been infrastructure, as you know, has been one of the areas where technological development, although, you know, is there, has been less fast or less, you know, marked than in other aspects. So I think prioritizing, you know, that is going to be very important to ensure that we can speed up. There's another aspect that I think is very important that for procurement, as we look at not only restarting the infrastructure investment, but also what we're doing now while COVID it's still prevalent, because we do have a lot of projects, and that's health and safety in the and you mentioned that as well, Enzo, in the work environment. So there's already a massive guidance in the bank. As you know, there's an environmental and social framework that also includes some important aspects, but particularly now there are certain aspects that needs to be included and needs to be thought very carefully by the contractors, and therefore the engineers as well. For example, in the contractor management plans, there is going to be the need to ensure, you know, that there are pre-employment checks. There's aspects of accommodation arrangements that are very important. PPE that needs to be distributed. There is to be appropriate structure, just to mention a few, to provide the support to the workers, like a telemedicine, for example. There's going to be new legislation and new regulation that is going to impact significantly the way the contractors, you know, manage their workforce, and obviously different rules that regulate the impact of the works on the community. So, you know, the things that have to do with hygiene, social distancing, and so forth. There's guidance out there. For example, WHO has good guidance on how to get the workplace ready, and also on water sanitation. But of course, there's more coming. The bank is also writing some guidance on this. And then again, there's going to be all these new aspects that will have to become important part of the bidding requirements. We're already beginning to write them into the bidding requirements, therefore of the strategy for the contractor to participate in this. And it will also add at the end of the day to what we call value for money, because when you talk value for money, it means also managing the risk in an appropriate way, and ensuring that those risks do not have a negative impact on the ability of the infrastructure, in this case, to deliver the intended results. So this will change, of course, will not change, but will require also a more proactive role on the engineer's part, and of course, anybody involved in monitoring performance and contract management. You know, I think I've used my time, but basically, so a massive focus initially, to sum it up, on health. These projects that are addressing the health emergency. So lots of procurement here of medical supplies and equipment. It's going well. It's, you know, this bank facility procurement already reached out and We already discussed hundreds of millions of dollars of offers that the countries are looking at, with 15 contracts already signed and moving forward, but already focusing on social protection and economic recovery. That it's already starting. We're writing a paper now that will go to the board soon. And then again, continuing looking at how all the different areas can be adapted to this. And infrastructure, as I mentioned, is critical, because when we talk about quality infrastructure, we talk about infrastructure that manage every possible risk. And this is going to be one of the risks that we'll have to live with for a long time. So that will have this impact. So that's just to sum it up. Happy to answer any questions or add on any points that you would like me to. Thank you.
Enzo, thank you very much for that very, very broad, approach in looking at it. And you touch on health and safety, people's well-being. Yes, infrastructure is critical. 16 trillion, gap. But this is maybe potentially, if you don't do something, we may have even bigger gap. The need to have, what is classified as, sustainable infrastructure is critical. The need to address the issue about ready shovel project is also critical. Keeping live project going is critical. You also touch on the need technology, which is very important. I know you would be disappearing off, later on, Enzo, but before you go, let me put a very quick question to you. This is very unusual. You are producing a number of guides, and these guides are really to aid. And I think Gavin mentioned that in his talking earlier on what, the World Bank is doing. I presume the others colleagues are doing exactly the same. Those guides presumably will be available very quickly and to the industry. Question?
Yes, there are a number of guides that are available, including one on these labor management procedures, which it's already, I think, posted. If not, I'm happy to send it to you so you can distribute it. I already shared it with the colleagues in the MDBs. And of course, there's on our webpage, there's a number of other guides that have to do more initially on how the projects are quickly processed and what they, but yes, I will look more into everything that is shareable, and I will share.
Okay, thank you very much, Enzo. I know that you need to leave later on, but just before you disappear, I'm sure I'd like to go through other colleagues to have their quick 5-10 minute speech, and then we can go into the Q&A. If we are able to secure your commitment, please do stay with us. Failing that, you know me, I'm always on your back. So Enzo, thank you very much on that. Can I invite Victor Escala from Inter-American Development Bank, who is a lead procurement specialist, to give us his view on the same subject. What is happening in Latin America? What is the experience? Is it very similar to the World Bank? And what should we be looking at in the pipeline? Victor, the floor is yours. Thank you.
Thank you very much for the opportunity to share the information and our view of COVID impact in the Latin American countries. As you know, today the pandemic is affecting significantly the region, especially South America. The bank have streamlined processes, and we have divided the approach into 3 phases. The first one is the immediate response phase. The second one is the return to the new normal. And the third one is the economic recovery. Right now, we consider that we are in the immediate response phase. So as Enzo mentioned, we have doing a lot of procurement, but also we have put in place 3 mechanisms regarding the project's portfolio. First one, we are reassignment. There is a reassignment of the health portfolio. We have 18 operations in 12 countries that are being already reassignment. Second, the second mechanism is we are reformulating and reprogramming the this year pipeline in mainly 4 areas. First, the immediate public health response. Second is safety nets for vulnerable populations. Third, economic productivity and employment. And 4, the fiscal policies to ameliorate economic impacts. So we are facing and forecasting that the last 3 are going to develop in the next month and probably years also. Another mechanism, we have provided a contingent credit facility that is a special approach that we have, and it's not being used a lot. As I mentioned, we are in the area, we are working with the immediate response. Regarding our approach from the procurement perspective, well, the bank have put in place some special measures. First, the universal eligibility. As you know, the bank buy and can finance the products and the services from the member countries. However, we are accepting to finance goods, works, and services from any country right now. Also, we are streamlining the method to use and our relationship with procurement agents or specialized agents that can help to provide support in the countries in a very rapid and quick response. We're talking with the Pan American Health Organization, we're talking with UNDP. We are trying to provide bulk procurement, especially we mentioned before, we're dealing with a lot of buying regarding ventilators, regarding personal protection equipment. Also, we are permitting the adherence to existing contracts. This is that if a country considers there is a procurement agency that have a contract that can be interested for another, for the Ministry of Health of some country, he can adhere to that country, to that under the conditions. Also, we have, as I mentioned, we have streamlined the procurement mechanism. In fact, we have the project procurement committee, and in this case, we are responding in 24 hours. We can receive a procurement request, and the next day we review what they want, regarding all the related issues, and we can approve that by very quickly. Also, we are working closely, for instance, with the World Bank and the Caribbean Development Bank. From the specific point of view of the infrastructure, right now, our prices are working in the business as usual. However, we have some requests, for instance, regarding the isolation of specific areas in health facilities, also regarding the isolation and the preparation of areas in international airports and that kind of things that allow the people and the governments to take the proper measures to face the COVID-19 pandemic. That is our approach right now to the situation. As I mentioned, we are expecting to face new challenges regarding the economic productivity and employment, and also fiscal policies. And that is my quick and executive resume of briefing of what we are doing right now. Happy to answer any question.
Thank you very much, Victor. That's been very insightful. I do actually appreciate the comment about collaboration with the World Bank and the Caribbean Development Bank. I think, the 3 points you raised, immediate response, return to new normal, an issue about the economic revitalization is quite critical. I would like to come back to that later on, because I do want to take the advantage of having Enzo online to have others to have a view, or maybe one or two questions before he goes. So Jack, I'm going to invite you to give us your perspective from EBRD, European Bank for Reconstruction and Development, as the Director of Procurement Policy and Advisory Department. Jan, the floor is yours. Thank you.
Thank you very much, Nelson. It's an absolute pleasure to be afforded the ability to participate in this seminar. I'm very happy about that. Thank you so much. And obviously, I say good morning and good afternoon and good evening or whatever to everyone who's participating in this. I would start by saying that under normal times, the MDBs or IFIs, whatever you want to call them, are normally in a situation where we are both collaborating and we are also at the same time competing. But I think in not normal times like this, it is very clear that we must set aside the competing part as much as possible and collaborate as much as possible. And I think that this has been recognized by the banks, and as you probably know, the heads of each banks have met actually a couple of times virtually, obviously, to discuss how we can use our respective strengths as banks to support during this difficult period. And when it comes to EBRD, it's obviously a bank which it has a very strong private sector focus, and not unsurprisingly, that means that the majority of the, let's say, support efforts that we are putting in are also continuing to focus in the private sector to fill that gap amongst banks who are predominantly in the public sector. And let's say the message from the bank is that all our ABI, our business volume for the next 2 years, are really going to be geared and focused and open for any support activities that is needed due to this crisis. Now, if you put that together, that means that we are basically setting aside or allocating 21 billion during this period. But to be a little bit more specific, the bank has put together what is called in our bank a solidarity package, which basically consists of 5 pillars, where the first pillar or the central pillar is called a resilience framework. And this resilience framework is there to provide finance to meet the short-term liquidity and working capital needs of existing clients and its affiliates. Now, this specific package is 4 billion. It's a framework of 4 billion. The second pillar is the enhanced support through the trade facilitation program. And as Enzo talked about, the importance of the trade, let's say, problems that we have right now, but also the liquidity problems that is in the sector. It's very important to have the ability to get credits to be able to transport goods around the world, which now is much more expensive than what we saw 6 months ago. So the trade facilitation program, which has been running in the bank very successfully for many years, has really had to step up and are reaching new heights every month in terms of how much money is being allocated during this program. We will also offer fast-track restructuring for distressed clients. This is obviously something that is always going on, but the focus on this has increased during this time, obviously. One of the core activities of the bank is really SME support in various shapes and forms, both through technical assistance, but also through financing. And this SME framework will see an enhanced importance during this time. We also have something which is the last pillar, which is called the New Vital Infrastructure Support Program, which probably has a good interest amongst the FIDIC members. But I would like to point out that when it comes to the infrastructure support programs, at the end of the day, as you all know, infrastructure will always require the components that goes into the planning and the implementation of infrastructure project, and that in itself cannot really change, even if it's a critical period. Now, if I draw an analogy, obviously there are things that we need to be very open for, like a comparison of when you build a new hospital or for long-term use, or you do something like here in England was called the Nightingale facility, which is there for a very short time. You have obviously a different approach to that, but as a bank which is a project financing bank, I think that we are going to see more efforts to try to support the long-term infrastructure in our bank. Yeah. And I also wanted to point out that our bank is only financing specific and defined projects. We do not provide sort of the programmatic lending, but that is one thing that I can see going through the project design cycle at the moment, that this is probably something that is going to expand in terms of how we define what is a project, where I can see that we are leaning more towards providing a broader defined type of projects, where, for instance, we can finance municipalities' different needs, everything from road rehabilitation to paying the energy bills in one project. But this is yet in the making and to be tested. Now, setting aside from what Enzo and Victor was talking about when it comes to the health sector, so far, even though I know that there is needs expressed from our clients, I haven't seen one project yet formulated which is totally directed to medical equipment as a response to COVID-19 requirements. So it hasn't really gone through. But we have for sure provided more capital, more financing to the market and to our clients than we have done in any year in the past. So we really have stepped up. There is no doubt about that. The business volume for the first quarter surpassed anything that we have done in the past. Very important when looking at this project is to continue to subject all these projects to normal requirements, not to compromise on standards, which is very easy to lean towards in these times, And in our case, the transition impact, sound banking and additionality remains the cornerstones of every project that we are looking at. And I think that is a very important message. It goes through anything that is being done now. Standards needs to be adhered to, because if we don't do that, we will pay later. And that is not a good approach. But also, as Gavin was mentioning before, let's say, key priorities of our bank includes transition to green economy, very important. It's promoting equal opportunities, accelerating digital economy, and strengthening good governance. And when it comes to good governance, this is where I have a bit concern of what I can see in our countries of operations, or many of our countries of operations, I have to say, not all, of course. But I'm a bit worried when I'm looking at procurement in this sense, because the changes to legislations, the rapid changes to legislations, and the exceptions that are being used at the moment is concerning to me, at least. And to give you a few examples, there are countries which have shifted all procurement under the defense procurement framework. And obviously, as we know, defense require less, let's say, transparent approaches and more direct contracting, and it is definitely not as open as when we see under normal procurement. We also have seen that all procurement of medical supplies are taken out from well-established e-procurement platforms. That's another worrying sign, because it means that your ability to, how should I say, get yourself deals which have more interest than just supporting the public might be more available than others. We can also see local preference schemes. I mean, everyone is obviously talking about protectionism in these times, but worrying is to see that local preference schemes are now up to 50–60% in some countries, making it more difficult for the already battered international market to step in and provide the best solutions. And I think that this is not a good trend. And also we can see that medical supplies are, and for sometimes maybe good reasons, given that medical supplies, especially those related directly to COVID-19 responses, we don't have let's say a well-functioning market anymore. You know, it's basically those who needs to buy which are chasing the suppliers rather than the opposite way around, you know. But there we can see much more of the direct contracting approach, which is okay, but it needs firm regulations. That is absolutely clear in my opinion. And this is where I think that banks like ourselves can fulfill a very good role. And I am coming back to what Enzo was talking about before, which I think that the World Bank and Enzo leading this have done a fantastic job in assessing the market, seeing what's out there in terms of available supply, and ensuring that quality and prices are acceptable. You know, that is a key thing. And as a third-party player, I think this is a fantastic work done by the World Bank. Yeah. When it comes to procurement that we are doing, or let's say that our clients are doing, and the regulations that we have as a bank, I would say it is very much at the moment business as usual in terms of procurement approaches, with the only exception if we will see any request for medical equipment. And there, given the non-competitiveness of this market, we have already agreed, and so myself, that we will as a bank rely on our good cooperation with the World Bank and tally on the good work that they have done in trying to find the right suppliers with the right quality supply for also our clients. That is the at least number one approach that we are going to have. We are also going to do, like Victor was talking about, working with the UN organizations in case we get this kind of request. And most important in general, from our point of view, we have I would say, a little bit of a luxury, and that is that we started a couple of years ago to develop and establish an e-procurement platform which our clients are using when they are procuring using the bank's financing and our procurement policies and rules. Now, in these times when it's difficult to meet up physically, it's much more difficult to provide tenders in a paper version, have tender openings which are transparent, etc. I think that the fact that we had an established e-procurement platform was, let's say, a godsend, so to speak, if I may use that word. And we have really stepped up in terms of ensuring that those clients which are still not using the e-procurement platform have moved over the procurement to the e-procurement platform. And I think that that has already shown helping a lot, both with efficiency and transparency. So that is what I would like to say during my 5-7 minutes, and over to you, Enzo. Happy obviously to take any questions later.
Thanks very much, Jackholt. Thanks for that quick view from I mean, I think what I sense coming through is more collaboration within the bank. Yes, you're private sector focused, but it's in business as usual, but there are other activity initiatives in the pipeline which you can help. Before I dive into questions, I think I'm going to invite Jeffrey Taylor from Asian Development Bank to give us his own view on the subject, and I'll close out with Manish. So Jeffrey, the floor is yours. Thank you.
Thank you very much, Nelson. Good morning, good afternoon, good evening. I'll try and keep this brief, bearing in mind we want a piece of Enzo at the end before he leaves. ADB has reacted like a bank. Yeah? We are like our partners in the initial phase of reacting to the COVID-19. We have approved a $20 billion assistance package. The encouraging news for infrastructure is that this is new money, new lending. It's not particularly on reprogramming. So the investment project cycle will continue, but under the circumstances of the new normal. Primarily that 13 billion is going on budgetary support. We're seeing in the US and we're seeing in developed and rich economies problems with liquidity. So the initial support has been a cash injection. We're also looking, as the other banks are, into trade finance, underwriting letters of credit, trying to make sure that that keeps going. We're making some targeted investments into health production companies. For example, we private sector lending in China to increase companies' ability to produce PPE. We're looking at cash transfer schemes in terms of the most affected populations. We're looking at the Benazir Bhutto Fund in Pakistan to transfer money to women-managed households. I think 12 million women are included in that program. We are, as I think has been stressed by all of us, working very, very closely with other MDBs and talking. This Enzo, Jack, Victor, is our first of 3 meetings this week, I think. We got another one tomorrow in Rome and then another one on Thursday in Washington again. We remain committed to the Sustainable Development Goals. I mean, these are at risk, especially as we come out into the next phase. And it's essential that those gains are built upon and secured. We, like Inter-American Development Bank, got rid of member-only procurement for COVID-19, went to universal procurement, recognizing this is potentially a constraint. That was quite a big thing within ADB. Common sense, if you look at it from outside, but we did that and our board agreed to it. We are looking at implementation through UN agencies when it makes sense to do so, but this has got to be a borrower's choice. It's borrowed money. They have to choose to route it through the UN agencies. World Bank as a UN agency itself is giving us some great inside track on that and how to work best with them. Thank you, Enzo. To work with them collaboratively for the same positive outcomes. IT is an enabler. We as the ADB have been able to operate probably at 110%. And I think World Bank, EBRD, Inter-American, perhaps the same. The head of the African Development Bank raised a subject that in the regional heads meeting, and so did the head of the IMF. IT as an enabler for resilience. So I do see that perhaps some of our traditional infrastructure will be new infrastructure as we move forward into the next phase. Digital infrastructure, resilience, and so forth, that enables economies to work differently and smarter than we do today. And that's essential. I note Jack's point on the e-procurement system. We're buying one a little bit late. I'm just about to see if I can go over our CIO's head to get the contract signed. We'll see. To provide an e-procurement platform for the borrowers that don't have one, to enable procurement transactions to continue. In terms of the actual impact on infrastructure, okay, Enzo, you have a broader view with the world, but we see huge divergence across the Asia-Pacific region in how it's been impacted. You have some countries, for example, Vietnam, that have managed the outbreak exceptionally well. China, impacted very severely in a small area, but contained it. So operations are quickly going back to normal there. India, not as clear a picture. Pakistan, not as a clearer picture. Uzbekistan seems to be working effectively at managing the risks. And the Pacific is becoming in if you like, an Australasian bubble with very, very low number of cases, but cut off from external trading partners. So we're seeing what we call EAs able to operate, but contractors not able to bring in materials or supervision consultants and so forth. Jack's point, very, very important, standards. We're seeing an attempt to erode some of these and using COVID-19 as an excuse. And we have to be very cognizant of that. And I think we all are. We share this information. You know, I'm looking at $600 million worth of roads in a country where they're saying, well, we only want national contractors. But they're not going to mobilize this tomorrow. They're going to mobilize it in the construction season Q1 next year. I don't know what the situation will be. They don't know what the situation will be. So how do we mitigate COVID-related risks going forward in infrastructure and in procurement? Enzo has very kindly shared the internal documents, which are now, I think, external with us. And it's about how do we COVID-proof infrastructure going forward, or infrastructure procurement. Maybe not proof, how do we mitigate those risks? And so it does give us something to think about, but it fits in with our development mandate, it fits in with health and safety, it fits in where we're going with the ILO and so forth. It just adds another new dimension to it. And again, on transparency as well, we're working internally to bring in, when we are approving direct contracting, I want that to be advertised. I want it to be published, who's getting the award, how much, and who awarded it. And that's a very, very essential governance tool. A lot of small procurement is happening. What used to be big infrastructure now may get broken down. And it's essential that is aggregated and collected and made public as well. So transparency plays a very significant role in the governance management or in flexible procurement systems. And e-procurement, as Jack says, is essential in that. And we're doing what we can. Another thing is what we're doing. If you want flexibility, you've got to get the governance inbuilt upstream in the project in terms of procurement, arrangements, structures, reviews, and oversight. So we actually, as a procurement function, are moving upstream in ADB's lending operations. And we do have a draft paper being circulated internally at the moment saying, no, procurement are writing this part of the loan now. If you want increased flexibility, the procurement specialist is accountable and actually setting the procurement rules for the project, not the banking team. So we're actually changing, not from a control perspective, but from a governance perspective. So we're actually changing where we're working. I will end there, bearing in mind we're closing in on our time. Over, Nelson.
Jeffrey, thank you very much. I think we've just about lost Enzo. I think, you know, we took it on board that he needs to leave. So we thank him for his contribution on that. And I'm going to really move on to Manish now to try and move the conversation for us. We can get into the open Q&A session. So Manish, the floor is yours. Thank you.
Thank you, Nelson. It's a great honor and privilege to follow such a distinguished panel. I hope all of you and your loved ones are safe and healthy. It's no doubt COVID-19 outbreak is first and foremost a human tragedy, affecting millions of people around the world. And it is also having, and will continue to have, impacts on all the sectors and impact local, regional, and global economies. It is safe to say this past few months have been among some of the most tumultuous and emotional that any of us can remember in our lifetimes. The impact of the coronavirus outbreak has been felt by individuals and families, companies and communities across the United States and around the world. The response to this crisis has been extraordinary. You've heard from all the IFI banks and Gavin about everything that's going on, but it is not only as much for what is required from our society as for what is revealed of us as people. Far from causing division and discord, this crisis and social distancing it has required has allowed us to witness something profound and moving about ourselves, our fond and deeply felt wish to be connected with one another and to do a good job. At Sheladia, the firm where I work, our priorities were twofold. First and foremost, to make sure our employees are best able to protect their health and the health of others. As part of Sheladia's overall response to the COVID-19 outbreak, we developed specific actions, as many of us did, the banks did, shutting things down, remote working, but above all aimed at protecting our employees, their families, our clients, partners, and the communities. Our second priority was to make sure that the action we take today are taken responsibly. In the United States, we were deemed as essential, and therefore we continued working throughout within the constraints of the contract and looking for exceptions. We felt it was critical that we continue to serve on our projects and at the same time look at future. So we are taking sure that we thrive as the world recovers from this pandemic. These are very uncertain times, and the extent and timing of COVID-19 are still not fully understood. We are reacting, we are continuing to plan, adapt, and share. Through webinars like this, through ACEC, we're getting industry data, surveys, talking with our competitors a lot more than we would have before. And as the situation dictates, with both the health of our employees and the company in mind, we are adapting it rapidly. We also have to adapt to short-term regulations, the impositions put by county executives, by governor. And in the United States, some of the governors don't agree with the federal programs, the impact, the health requirements that Enzo talked about, the work hour conditions. Some contractors are not working, some contractors are double the work. So as a consulting firm, we have to adapt to a lot of realities. But we are thinking it in a compartment framework that also allows us to think in a balanced way about the future. As consuming as negative pressures can be, we are keeping a close eye on what others are doing. And as we think about other positives, it has been very rewarding to hear from many of our clients and colleagues on their stay-home experiences, from seeing children or grandchildren being born or taking first steps to engaging in online schooling, to learning about things to do without. In my own life, I'm spend more time with my kids in last few months than in last few years. And I think our lifestyles are being challenged, as is our work. It is also possible that our lives are being enriched at the same time. It's affecting various industries, and public construction has been one of the few industries, in my opinion, that has not been impacted as much. Activities are continuing, but I think it's short term. In the state of Maryland, they're predicting $1 billion shortfall due to lack of sales revenue and other revenues per month, which will have a direct impact on infrastructure work that has been funded. I think 2021 will be a tough year for construction industry in the United States, and I think globally as well, because the funding shortfalls will really come back to haunt. The supply chain disruptions, shortage of labor, subcontractors, materials, as well as the impacts of the contracts. FIDIC has issued a very helpful document on force majeure, but each client is interpreting it differently. While the future is uncertain, one thing is certain, that this crisis will pass. Our nations and communities and our industry will recover, and we all will return to our new normal. Because it is also certain that the world won't stop, and it is only a matter of time before we collectively find a solution of building a resilient future. In the end, I would like to end with a quote from Leonardo Da Vinci. I've been impressed with the urgency of doing. Knowing is not enough, we must apply. Being willing is not enough, we must do. Thank you, Nelson.
Thank you, Manish. You know, if you hadn't said that, I would have been disappointed, because in all your speeches, you always quote, Da Vinci. So again, there's another one to add to my repertoire. Manish, thank you very much for giving us that perspective from your company, from, ACEC perspective. And yes, you did say it, that one thing that is sure is that this will come to pass, and we all have to look back at it, and there will be a new future, which really, that begs me to the point, what does the new future look like? First of all, I want to thank all the speakers, because you really cover the subject thoroughly from your perspective. But there's a common trend coming through, which is the world of collaboration, working with other hubs, and sharing best practices and technologies. So I'm really going to dive in and start off with Jan Jakov. I do know that you have your e-platform and you're very proud of it, and it helped to fast track the whole process. And then you start talking about the issue about new technology, new things I want to invest in. Are there anything within EBRD right now in the pipeline where the old technology, i.e. the old infrastructure as against new infrastructure? I know you are not there yet. Are there any new thinking going on about the range of infrastructure that will be something that the private sector should be looking to? Because I know that EBRD is very much private sector focused and also SME focused. Are there new area of infrastructure that is on top of your agenda right now? Or is it one about building the resilience based on the current, what we know? Jan, question is yours.
Well, I'm afraid I'm going to disappoint you, Nelson, because I, you know, at the end of the day, I think this, you know, when it comes to innovation, the banks are not really the tool for innovation. Yeah? The innovation has to be driven by the market players. You know, they are the ones who are coming up with the new ways of dealing with things. And you know, we obviously would do anything that we can to support new innovation, but I doubt very much that it's going to come from the banks. You know, if we talk about digital innovation and how to use digital, let's say in the context of infrastructure, you know, this is really where you, all of you who are sitting listening into this, you are the real experts, and we rely on you to finding the more efficient ways of using the digital economy. Now, when it comes to the infrastructure, I agree with Manish when talking about the lack of financing, which is going to be in this area, which means at the end of the day that if you have only so much money in your pot as a government, and you have a society which has many needs, you need to look at the emergency and the crisis first. Yeah, and us as IFIs, even though we are reasonably well equipped with money, it's still not going to be enough to fill all the holes needed. So I think holes needed is probably what this is about. It's going to be a patchwork of infrastructure needs, which is going to be the ones that can be financed. We talk about the road maintenance type, you know, that's because if you don't have the money, you cannot invest. Having said that, there is still a lot of liquidity out there in the private sector. So maybe what we will see is more reliance on the private sector in even more than now in the public sphere. You know, more PFIs, more concessions, more of that type of financing. Very possible, but I'm not a whiz man. You know, I don't know. We will see.
Jan, thank you very much. I think what I'm hearing from you, you want the industry to develop new technology and the bank will come. Obviously, that sounds very risk averse, which is what I expected. But having said that, and I'm going to put the same question to Jeffrey in a slightly different angle. I mean, I heard you said fund a bit diverted across into government, into different entity. You talk about Peninsula Bhutto, issue. I mean, is that the way to inject capital at the right level for the intervention that is required because of the urgency of it and get things across to, or is that just a one-off one? Jeffrey?
Yeah, I mean, one of the things we recognized immediately is the informal sector have just lost all of their livelihood and their ability with lockdowns to actually buy groceries and food for their families. That's particularly true here in Manila, where 25% of the working population are informally employed. Are now informally unemployed without a social safety net. So, and these are the most vulnerable in Asian economies. And the same is true in India, the same is true Philippines, Pakistan, and so forth. So it's very important that they don't get left behind because, you know, the middle classes feel it hard, but it's not a literal survival mechanism, whereas the poor those who live in poverty, are disproportionately impacted by this, and as are women also. So that was the reason for the prioritization there. And it wasn't the moving of funds. This is fresh money. We leveraged our balance sheet to issue more bonds. We accelerated that. So this is additionality. This is not repurposing away from traditional investment projects. It's additional money.
Okay, thank you very much, Jeffrey. I'm going to invite question from the floor. I've seen a few questions coming through, but I've got one or two to put to the panel first before I start picking up. So please be patient. And also to the panelists, please don't try to address the question. I want to keep, the question flowing. I'm now coming back across, to a friend from Inter-American Development Bank. You raised the issue that, the activity in your particular section is very much, engaging very quickly the early phase of it. And I was just wondering, in the early phase of it, what the real difficulty is really at government level or at the real project level? And so, Victor, that's the question to you. Are there problems at government level or at project level? What sort of early intervention do you have to make in your section?
Yes, thank you. Oh, well, yes, we're facing some challenges. The main challenge that I can address right now is the matching between supply and demand. And also from the perspective of the government, it is not easy to clarify the demand because you have internal tensions. And that's, I would say that that's our main issue. We are working to try to provide that matching. We are speaking with our colleagues in the other institutions, with the World Bank, with the Caribbean Development Bank, in order to help our countries to identify their needs and how many equipment they may need, what they can forecast because right now the increasing of the pandemic in the region is happening right now. We have some lessons learned from what happened in Europe, what is going on in the United States. And also we have a quite, there's a different impact there, depending on the country. We all know that in Brazil, there is a major impact, but in other countries, there's a small impact. And also at the Caribbean region, we don't have a serious situation that we made. So I think that the main issue is how to match and the supply and the demand. And also, we don't have a market. We have a very volatile market. So it's not an easy way to deal, and also the borders and the restriction to the transport and the logistics are also an important issue that we're facing right now.
Right. Thank you very much. There's a question now. I'm going to start picking up question from the floor. This is from Mark Mosley, and this question is directed to all the panelists, but actually it said Jeffrey mentioned the issue of flexibility in contract. Do the speaker foresee a shift towards greater flexibility in future PPP contract? And if so, how can this be reconciled with the preservation of long-term value for money for PPP procurement? So Jeffrey, do you want to respond to that?
We've been moving towards, as MDBs, greater flexibility anyway. So this is not a COVID-19 just as FIDIC has updated its contract suite, broadened it to provide more flexible options. We in our procurement hats have been doing the same, but the fundamentals don't change. As Jack mentioned, competition, transparency remain important. Value for money, as Enzo mentioned, those are the drivers of good procurement. They haven't gone anywhere. So if we're talking about life cycle cost analysis, if we're talking about factoring in sustainable evaluation criteria by giving it a value and a weight, that's possible, but it's still procurement. So those drivers of value for money are still there, and fitness for purpose. So I wouldn't expect it to be anything crazy. And you know, the public sector comparator and a PPP has still got to be done. It's still got to make sense to put it in the private sector versus the public. And so all of that hard economic reasoning has to be done. That's not gone away.
Thank you. Jan, you did talk about there is a tendency as a result of the COVID-19 for people to start to move away from the standard of the protocol that is acceptable to infrastructure investment. I mean, how do you think, you know, we can address that so that really this issue about quality, integrity, and all those issues and sustainabilities are not compromised whilst we still address the issue of COVID-19? What would be your message to the industry?
Well, that's part of my job. It's part of why I have my job, is to actually discharge the fiduciary duty over our shareholders' money. That too has not gone away. Okay. Otherwise, I wouldn't be here. So you know, the governance and the way that the money is spent is perhaps even more important in the face of what we have today, because the resources are scarcer.
Right. Okay. But I'm going to put the same question to Jan. Then Yakov, I mean, you talk about that we need to be careful that we are not, you know, bamboozled by the COVID-19, that we do not compromise on the standard. I know you've got your e-procurement that can fast track the process. How should the industry, you know, respond to that issue from the standpoint of the EBRD and other MDB banks? Jan?
Yeah, I think, let's say, when we talk about using our own financing, it's obviously one approach, given the fact that we are in charge of the procedures and policies, you know, it makes it easier to keep the standards in what we are doing, obviously. But the big challenge is obviously to talk with our countries of operations, because at the end of the day, we only provide a small part of the general envelope of financing in any given country. You know? So, but there, our policy dialogue efforts that we are doing as banks are extremely important. And there, I think that messages from organizations like yourself, like FIDIC, are very important, because they provide that sort of backing that we need in order to have that dialogue. You know? I think that is very important. You know? And I don't think one should underestimate the importance of this policy dialogue that we banks are doing, you know? Because it's not only that we are going in providing financing for a particular project, it all comes with a stack of requirements that needs to be fulfilled in order for us to provide that financing. And I think if you look at the EBRD, you could see that even we have been doing policy dialogue since we started, but the focus on the importance of policy dialogue and what we can achieve with that has certainly been recognized and enhanced during the last 5-6 years. You know, we have now a whole vice presidency which is geared up totally towards this. And any kind of backing that you can provide in formal messages from the industry through organizations is useful, for sure.
Thank you very much, Jan. Another question from the floor. Really, I think this is looking at, you know, some of the emerging markets where this investment and intervention is going through. So how can the banks could ensure that government are prioritizing informal settlement slums and the informal economy as well, particularly in the least developing country settings? I think we look about, you know, emerging countries where we have challenges of, you know, slum, at the same time about economy. How do you prioritize that? Is there any guide that is coming through? If I put that across to Victor, any guide that is coming through, if you look at the Brazil and you look at that area, any guide that's coming through as a result of this COVID to help the government to separate the issue about the slum as against economy? Both are equally important, but how do you prioritize that?
Yes, well, one of the, I mentioned that infrastructure is going to business as usual. In this case, this kind of country cannot stop the works. This is economies that have some troubles and they have to keep on going. So therefore, they are trying to maintain these economic movement. Also, in the bank, we are working in cash transfers. There are some projects that are requesting that kind of schemes. And that's what can I say regarding the issue.
Right. Okay, thank you very much. There's a question here from Kitty Kitchen. I think most of you probably know who Kitty is. And I think she's making reference back to one of the speakers who talked about the banks are now in a position, or government are in a position to create what they call by COVID-19 bond. And I suspect during the Second World War, there were, war bond, which the government used to actually come out of the whole investment and infrastructure. Is there a case for that? Jan Yakov, is there a case for opening up a COVID-19 bond? Will that help? Because I don't believe that's a big issue, but what's your position? Jan?
Well, my first position is to say that I'm a procurement specialist, not a bond specialist, even though we do provide financing through bonds, and we buy bonds and we buy equity, etc. And maybe that is a possibility. I don't know. I cannot say. It's not within my realm to make any judgment about that. Sorry.
Thank you. There's a question from the floor. I think this question is partially addressed to me and also addressed to Enzo. And I think Enzo used the words that this is a clear case of force majeure. He said, but you always refer to the FIDIC guidance note, which is self-explanatory. It might be a good idea to mention this again to correct any misunderstanding of FIDIC view. I think just in answer to that question, force majeure boils down to interpretation in different parts of the world. Some parts of the world, there's complete stoppage of no work because of that. Some parts of the world, the country actually say you can continue with construction work. So really, we can't make a blanket statement on force majeure. Yes, what we are going through is unheard of. If you have the time, please go back to the FIDIC website and download the guidance note as Manish talked about. That is being useful, but you have to look at it and read it carefully in different individual countries and how it's applicable to you. For force majeure, you really have to go through the step to demonstrate what exactly is the issue. And actually, one point that keeps coming out on the issue of force majeure is an opportunity for the industry to come together to find a resolution, and we don't go for legal issue to resolve the matter. So I'm going to pick another question from the floor. I think the question goes about health issue, fair psychology will affect lending and implementing could be unvetted technology. I think the issue is when you have issue about health and psychology, you have to deal with both together. But at the same time, how do you apply technology in the process? One of the points that was raised in the case of the speakers earlier on, who was talking about people are now working virtual. I think, Manish talked about that. And you have to make sure you think about the health and safety of your employee. You also issue about, it's not just about, make sure that your employees are safer, but it's looking beyond that. Manish, from your experience, how do you address this issue and concern about the psychology of the health and safety issue, and yet, keeping the company operating? Manish?
Nelson, it's an evolving question. We are all struggling with it about when do we open the office, whether there'll be one-way lanes within our corridors, whether they come alternate weeks, whether they come. We've at Sheladia, we've put hand cleaning stations. We are looking at our own cost, putting UV cleansers at certain locations. We are limiting, stopping usage of microwaves and kitchen facilities. But this is something that's going to evolve over time. And I think a forum like this, and I think IFIs are no exception. I think because they're also people come to work. So whether it's IFI, whether it's a private sector, I think we'll have to collectively see what makes sense and not go overboard. But I did want to, there's a lot of talk about PPPs, and I think I would like to have a point for everyone to think about. Last 5 years were great economic times of our century. And still, many PPPs globally failed, including in the United States. Many private sector funds set up for PPPs withdrew from the market. In India, more than 80% of PPPs or concessions in the road transport sectors went for restructuring. So I think we need to take this opportunity and reflect. And instead of just putting the same thing out to private sector, there's no money cheaper than the government money. So if the private sector is going to come in, they have to make money. And I think profit has become a bad word in a lot of parts of the world. I think if we just address it up front, I think collectively we will come up with a solution that is much more viable, much more transparent, and then with good governance and good job creation, which is what is required. I mean, even after World War II, I mean, infrastructure is a necessity for first responders to reach, whether you do health, whether you do agri systems, whether you know self-reliant, you have to be able to move things. What IFIs do is basically support the livelihoods of people. They generate livelihoods. I think there's a need for messaging, and maybe FIDIC can play a role of messaging the role an engineer does. And PPP, you know, it's a silver bullet, but I think it is often misunderstood. And at least I would feel that we would take this opportunity in collaboration to figure out a model that can, you know, meet everybody's objectives.
Thank you very much, Manish. I think that's a big subject on PPP. If you go through the track of question here, there's quite a lot. Gavin, I want to come back to you because you set this scene at the beginning of the conversation. You talked about, yet, you know, the demand for the sustainability development goal is still there. We need to address that. And increasingly, we talk about, you know, ESG, which is, you know, environmental sustainability, you know, goal in the financing. Do you think, based on what the, you know, IFI said, that we are moving in the right direction and the COVID-19 is not going to compromise that? Or is there any particular message, as Manish said, that we need to echo that you come from FIDIC, from your perspective on the issue about SDG? Can you unmute, Gavin?
Yeah. Okay, thanks for that, Nelson, whoever asked the question. But I mean, I think there's a temporary pause at the moment, which is probably going to be prolonged to a certain extent. And the IFIs, their focus is clearly initially on providing support to countries' health systems, systems for essential services, food and nutrition, those types of things, which are clearly needed. But I'm just a little bit concerned that the future and recovery is going to be on job creation, infrastructure development, etc. So we have to have that happening in parallel at the same time. And I was talking a bit about having a program of shovel-ready infrastructure programs and financing lined up. And I think it's essential that we're working on that at the same time, because if we really want to get back on track with the SDGs, and I think there will be impacts on them, and there is a clear opportunity here to perhaps have a refresh and bring governments of countries together as well, so that there's a refocus on the SDGs and inclusiveness and you know, all of the things around this that are so important, and perhaps it may help developing countries and emerging economies in the future as well, because I think there'll be much more inclination to invest in those countries if they're aligned along with the SDGs. In terms of FIDIC's response, I mean, we're doing a lot of work around the SDGs, and the Sustainable Development Committee in particular of raising the profile of FIDIC and the industry. We have a regular slot at COP, for example, and the Urban World Forum and various other things. And I think there's still more that can be done. And the FIDIC board have been talking about this for quite some time now, when we're refreshing the committees and we're improving the focus on that. But there is a lot more that we can do and will be doing going forward. But I think that it's a pillar of FIDIC, sustainability, and therefore the SDGs, which we want to focus on. But we have to keep in our minds as well inclusiveness, gender, diversity right throughout all of this, as well as obviously achieving the goals and having greener lives, and it's linked to well-being and health as well as going forward. So that would be my response, Nelson.
Okay, thanks very much, Gavin. I'm going to ask Bill, and then I'm coming around to each panel speaker for your one-sentence advice to FIDIC going forward beyond this particular COVID-19. Bill, you've listened to all the speakers, and I know that you rather prefer, to keep it short. But any comment, any feedback from having listened to
Thank you, Nelson, and thank you very much for all the speakers. Just fantastic presentations. The one comment I would make, Nelson, is an emerging theme that I absolutely agree with, and that is that the future for our profession could be more difficult in 2021 and perhaps 2022, as many agencies that fund a lot of our infrastructure projects find them in financial deficits. A few people mentioned that. I think that's a very significant concern that we need to keep our eye on. It's going to make shovel-ready projects even more important. The other thing I'd mention is when the webinars are over, you and I and the Secretariat intend to start producing what we call state of the world reports that remind people about the need for infrastructure improvement even before the virus, particularly in areas of sanitation and health, all connected to the Sustainable Development Goals. So we'll hopefully be seeing some of that towards the end of the summer, and we intend to keep producing those to help all our constituents be reminded of the importance of dealing with the infrastructure problem. Thank you, Nelson.
Thank you very much, Bill. I'm going to go now to Victor. What is your one-line advice, comment to FIDIC beyond this particular webinar? What should we be looking at?
Well, I think that the main lesson, or one of the interesting lessons that we have, is that this collaboration, I mean, between agencies, we used to have our own agenda and so on, but now there is a lot of collaboration, not only because from these agencies, but also from the private and public sector. So I think that this example that FIDIC has doing all these seminars, and we are keep in touch and trying to go to the same, try to reach the same goals. It is important, and we have an open kind of communications right now. That is one of the things that I would like to remark.
Okay, thank you very much. Jackholt, you know, your advice, comments beyond this particular webinar, what else should we be looking at? What's your advice?
Well, my advice probably goes back to something which I know that you already are very well aware of, but I think that the environmental, health and social standards are extremely important, and I think that this is an area where all the banks are working hard to try to keep up very, very high standards. And I think I invite FIDIC to work together with banks like ourselves and sort of further promote those standards through the documentation that you are providing. I think that would be my number one, let's say, response to your question. Okay, thank you very much. Manish?
I think I agree with everything everybody has suggested, you know, ESH, inclusion and diversity. But I think it sums up in a quote from Lee Iacocca, a great American businessman, who said, "In times of great stress or adversity, it's always best to keep busy, to plow your energy into something positive." And I think as long as FIDIC gives hope and works with the banks and others and to the businesses with the positive energy, I think we will survive and thrive.
Thank you very much, Manish. Jeffrey, yours before I close out. Yeah, thank you very much. Jack will remember the original quote, but I would say the baby stays, the bathwater goes. And that man had a splendid moustache. This is not a new normal. The principles remain the same. And just one other point, echoing what's just been said, I would say in adversity, opportunity. Thank you very much, Jeffrey. Thanks for all my speakers. I want to start by saying massive thank you to all the audience. We had nearly 800 people register. I believe we had close to 600 people participating. That's fantastic. So thank you to you all from wherever you may be and may be sitting right now. And I hope you'll keeping safe where you are. I want to say thank you to all the panelists, you know, starting off from
Bill Howard, once again, continue to support us regardless of the time zone different. Bill, thank you very much. To Gavin English, our board member. Enzo De Laurentiis, who's disappeared off, my good friend, who's got other commitment to do, and I'm sure that he recognized that he needs to be here, but I'm really pleased he was able to join. Victor Escala, we don't know each other, but we are getting to know each other, and I'm really pleased that you're able to join us. Thank you very much. Jan Jakov, what can I say? Very punchy. Can I say at this point, I'm sorry that you went through the COVID-19. You and I were meant to go to Italy. We escaped Italy, but you got the COVID-19 and I escaped. But thank you very much for giving us that insightful feeling from EPRD. Jeffrey, the last time I was in Manila, we talked about so many things. We never knew COVID-19 was coming through, but guess what? We are where we are. We had to deal with the reality. I'm glad that ADB is moving forward. I'm glad our relationship is continuing to strengthen from one point to another point. Manish, thank you very much for your leadership. I'm looking forward to you supporting us as the new chair of FIDIC International Finance Institution, who help us to drive our relationship forward. And of course, Gavin, thank you very much for your continued support to what we're doing. What have I heard over the last 1 hour, 30 minutes? I think the big issue is that we do recognize that the role of the infrastructure, what's called international financial institution, whether it's MDB or not, are very, very critical. They help either through grant, loan, or all sort of scheme to make sure that investment in infrastructure is absolutely critical. We heard it from Enzo, 16 trillion shortage. Would COVID-19 make it worse? I think the message I heard is that yes, people are dealing with the crisis and health and safety is critical. Yes, we have to look at how do we rebalance the business and come back into business as usual. But nevertheless, whatever we do, the issue about standard compliance and governance is very, very important. I also hear the word that the SDG, whether we like it or not, is here to stay, will continue to be a big issue. But what is important is that at no point should we, as an industry, either in the consulting world or in the contracting world, or if you're a client or a government, compromise on standard, on the issue about integrity and the issue about quality and the procurement process that we need to go through. A lot of message that come through there. I want to say massive thank you to all of you who participated today, wherever you are, and also thank you to my staff, particularly Barbara, Andy, Dajuna, all of them behind the scene who are making sure that I'm giving the right brief and we say the right thing. But having said that, on Thursday, we'll be looking at client, investors, and developers' perspective on the fragility of the construction and infrastructure sector. How are we going to come out of it? What is the private sector looking at? What are the investors looking at? And how do we create safety jobs? And how would they ensure that program of investment continue to move forward? What is the government doing? And what is the industry reaction? These are the issues that we're going to explore. I would not be here to join you, but my good colleague, Andy Walker, is going to moderate that section. So I wish you all the very best. Wherever you are, keep safe. Thank you very much. God bless.